And speaking on Persistent Systems itself, the stock up nearly in double digits, almost 11% after having seen a big move already, very close to its 52-week high for that stock as well. Went into the numbers with a cut of almost 10% from its 52-week high. Currently, as we speak, with today's up move, it's gone back up to that 52-week high. We have the management with us on the show. Sandeep Kalra, who's the CEO, joins in to discuss the quarter gone by. Thanks a lot, Sandeep, for joining in. You've achieved 5% revenue growth in the first quarter and the second quarter. Now, the obvious question, the visibility for the second half of this year, what do you have on?
So let me first summarize the result for the quarter. For the quarter, we saw 5.3% in dollar terms, quarter on quarter, which translates into 18.4% year-on-year growth and a revenue of $345 million. In rupee terms, this translates into 5.8% quarter on quarter and 20% year-on-year. And as you rightly said, this is on the back of 5.6% dollar term growth last quarter. Now, if you look at our pipeline, we have announced significant amount of deal wins. So that should bode well for us as far as the H2 is concerned. We don't give forward-looking numbers, so I'll not be able to quantify that in dollar terms and so on. But if you look at our overall annual contract value and total contract value that we have booked in the last several quarters, that should bode well for us.
But do you think that the second half of the year can be better of the second half of the year last year when you clocked around 3.5% of revenue growth?
As far as the pipeline is concerned, as far as the order book is concerned, it points in that direction, but we'll let the time flow by. Otherwise, it's again like giving forward-looking, kind of numbers. As you've seen, we have grown 18 sequential quarters. We have outperformed the industry. We have invested in AI-led technologies, the platforms that we have built for both product companies and for IT side of the house. And we are relatively confident of outperformance from the sector perspective.
That's good. Confident of outperformance from a sector standpoint. But can you explain what's happening on the margin front? I mean, there is a reversal of contingent consideration payable on acquisitions. How much has this boosted margins by in the first half? And what happens to the margins in the second half? And also FY26?
Sure. So let me take a little time to explain this to you, because I think this is a question that has been brought by you last quarter as well. So look, when you do acquisitions, anyone who has done acquisitions understands that, not 100% of your acquisitions pan out 100% times the way you think they should, or the basic hypothesis for that. Some of the acquisitions do extremely well, and some of the acquisitions don't do well. When acquisitions don't do well, it is contingent upon the company to still perform the way they had planned to perform. And you need to invest in building capabilities around your sales and marketing and so on. In addition to that, if you look at the last 2 years, the technology services market or even the technology market is being disrupted by what many people call generative AI. I would call AI at large. And we have been doing significant investments in that as well. Now, if you look at the reversals that happen for acquisitions, if the acquisition doesn't perform, the payouts don't happen for the earnouts that are there. That is deployed by Persistent in our sales and marketing capabilities, in our other technology-led capabilities, and we still have delivered. If you look at the last several years, last 4 years for Persistent has been 12.9%, 35%, 35%, 14.5% year-on-year growth, which has relatively on a CAGR basis for last 4 years outperformed the industry by 16%, the compounded annual growth rate for Persistent being 24% for the last 4 years. So if one has to look at a holistic picture, holistically, Persistent has delivered with acquisitions doing very well, and some of them not doing very well, investing in the right places to deliver the overall growth. So we are very confident the trend will continue in terms of our growth and margin trajectory. We had said we want to be at the same margins aspirationally as the last year, and we'll deliver to that. We are on that path. We'll see how it pans out. In the years to come, with the optimizations that we have done, our margin should improve. We have said very clearly, our aspiration is 200 to 300 basis point improvement on the margin front over the next 2 to 3 years, and we stand by that. Hopefully that answers you.
Yeah, absolutely. We noted that point on the margins. Now, the street is expecting a pickup in spends due to interest rates cuts. Is that likely? What are clients telling you for 2025? Will they see a pickup in budgets?
We are listening to the customers in terms of their apprehensions about the elections, apprehensions about the Middle East, where things could go wrong. At the same time, the interest cuts are, obviously a good thing, good news for many people who are leveraged. Otherwise, also people who want to invest, the cost of capital goes down. We'll let the things pan out. Overall, too early to call. Green shoots are there, but we'll let the next 2-3 quarters pan out because a lot of these things are very dynamic in nature.
Right. I'm sorry. I'll just comment on that once again. You said you're expecting green shoots, but when?
Green shoots, if you look at our BFSI as well, our BFSI grew. Healthcare life sciences has been good for us. Technology segment, we are saying, at least for Persistent, will start, turning green. And look, I will also say this. A lot of people talk about stress testing of banks and so on and so forth. It's not the environment people are testing. It's the bank that the people are testing. Similarly, a company's performance is dependent on the macro and other things to a good extent. But how a company like Persistent behaves, whether it is COVID, post-COVID, bad economy, good economy, we have proven for last 18 quarters of sequential growth, we can handle different kind of economic conditions, macro conditions. We know how to figure out the revenue pools and profit pools, connect the dots and deliver a good return for our customers, investors, partners put together. So irrespective of that, we are confident we are on a good trajectory and we'll give it our best.
Appreciate you joining in, sir. Thanks a lot for giving us all that commentary. For the time being, the street has taken heart from that commentary that's come in, and the stock has moved to the high point of the day. Now we're up close to around 11.5%. So clearly, the street has listened in to what the management had to tell us.